Welcome to today's Daily Report market analysis videos with me, Richard Ferry, market analyst at Hantec on Tuesday the 4th of August. There's been a sort of mixed look today. The dollar's slightly started to fall over a bit. It had that attempted rally sort of Friday into Monday, and it's started to now sort of roll back a shade. Nothing too significant. We had that, as you can see, if I zoom in here, this is dollar index, pick up Friday and Monday, but just sort of back a little bit today. You've seen that yields have just fallen over a touch this morning on the 10-year and the 2-year, and that's sort of weighing into the dollar a little bit. And subsequently, we're seeing some mixed move across majors. Cable's down, actually. It's the only one that's really underperforming the dollar. Everything else is doing okay. Euro 0.25% higher, along with the Aussie dollar, Swiss franc as well. But Kiwi and Canadian dollar basically flat. So yeah, a few mixed moves, nothing too decisive. We've got the S&P 500 that broke out last night to multi-month highs, high since February now, on course towards the all-time highs again. Futures are slightly back a little bit, but nothing too decisive. And they were actually higher early morning today, but just dropped back and sort of weighed a little bit on the likes of the DAX, for example. But FTSE and CAC are basically flat on the day. So we're sort of looking out for a bit of data point today. Nothing really decisive, nothing that's going to be majorly market moving. You've got the factory orders for the States, which are at 3 o'clock for June. Expected a growth of 5%, but we're more sort of focusing on the July data at the moment. So June numbers a little bit backward looking now, and may not have too much of an impact. Okay, so let's have a look at my chart of the day, which is the New Zealand dollar. Now, Kiwi has been rallying over the course of the past few months, but that rally is starting to falter a little bit. Nothing too decisive, but two negative candles in a row have just dragged it back to the 66 big figure breakout, 65.85 to 66 figure, these two highs from June, July. Breakout levels, old resistance becomes new support, and that is being tested pretty much as we speak. But you look at these momentum indicators rolling over on stochastics, MACD, RSI to the mid 50s, sort of point at which picked up back in June and also July. So that needs to now sort of find the level of support, I think, and continue to trade above 66 figure. Otherwise, it starts to look a little bit more tired, and you could then open 65 figure as the bigger test of the reaction low. But as I said, a close under 65.85, or I suppose if you wanted to do 65.75, yesterday's low, close under that would really sort of confirm the move sort of turning corrective on a near-term basis. And then that would open 65 figure, and the big support on a near to medium term basis at 63.70. But at the moment, it's just sort of back to this crossroads, and it'll be interesting to see how the bulls respond to these two negative candles in a row, just sort of consolidating pretty much flat on the day as we speak. So yeah, it's a little bit less positive than it was, and that is a little bit of a near-term concern, and that concern would grow if you breached 65.85. Here we see on the hourly chart, momentum indicators had been more positively configured, but now that those MACD lines are faltering underneath neutral, RSI faltering around the 50 mark, you've got lower highs, lower lows starting to form. So there are question marks surrounding how the market is sort of going at the moment, and the bull run may be a little bit tired. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.